I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, Natural Resource Specialist at the Oxford Club. Welcome back to the show.
Thanks very much for having me on.
Well, the Fed has been making all their noises all year long about possibly raising rates. Are they going to do that?
They might. I mean, there might be a one rate raise that's kind of a fig leaf. But the thing is that the Fed really undelivered on what some Fed governors had promised going into the meeting. Because at least a couple of them were saying, well, you know, we could raise rates multiple times this year. And it turns out that's all for naught. This isn't the first time they've done it. In fact, this is the second time this year that they've had a big buildup going into the meeting, and then it turns out to be nothing. And in fact, the exact same governor said the exact same thing 1 year earlier, and nothing happened then. So I think the Fed is really shooting holes in its credibility at this point. But what did that mean? Well, it certainly gave a boost to gold, which already got a boost because of what happened in Japan. Japan did not stop out its big pipeline of free money into the markets. Instead, they're going to target interest rates, and so we'll see how that goes. But the market obviously doesn't believe that the Bank of Japan will succeed at that, so that's why they took the actions they did. But that really boosted gold after that, and so that's just laying into the other factors that are driving gold higher. I could go into some length on that if you want, but I mean, what we got from the Fed is a green light for gold, and I believe, by the way, the Fed will try and turn things around. We should see over the next couple of weeks, they'll come out and sell the idea that they'll even raise in November. But you know what? They aren't going to do it. And the fact they've hurt their credibility so much means that the market shouldn't be affected for more than a few days when that happens.
Why do you think they keep doing this? Just because they think it's their job to make noise?
Well, because they have been successful at managing the market through talking it where they want it to be. And so if you can do things just by talking without actually having to take action, you know, that appeals to the lazy in all of us, doesn't it? I mean, they don't actually have to do anything, and they are worried. They are worried about taking action because of all that foreign debt that's actually hooked to the treasuries, right? They don't really want to yank that higher because then what happens to all that debt over in China that's dependent on the treasury rate? I mean, there's a chain of dominoes that could fall, and I think they're really worried because something comes up all the time. Look what's happening in Germany right now. Deutsche Bank is hitting new all-time lows. And this is because of a problem that it has with the U.S. Department of Justice, where it fined a huge amount of money, but then they're doing what they shouldn't be doing. All the big banks are doing things they shouldn't be doing. Heck, we could talk about Wells Fargo and what an incredible piece of organized crime that was. So there are stresses on the global financial system, and so I think the Fed, when it comes down to it, at the end of the day, they say, you know what, it's too much risk to raise right now. We'll just let things go until we see some signs of real growth. But I believe we have entered a period of slow growth. I don't expect things to change. I have to tell you, this is not a popular opinion where I am, but that's just the way I see it, because until something changes, things should continue, and what we're in right now is a low growth environment.
What does that mean for the average investor?
Well, I think you should look for things that pay income, that can do okay. There are oil companies, by the way, that can do okay even in this low price environment. They have to be working the right piece of real estate. They can do well. REITs can do well. We have seen the housing market come back, but not nearly as much as some people would like. And there's always the risk to that there could be some kind of consumer slowdown. So, you know, there are risks there. I might use those risks as a time to enter REITs and stuff like that. There are other things you can buy that pay you nicely, but you also might look at things that benefit from these huge waves of central bank cash that are just flowing around the global markets. Because it's not just our U.S. Fed, is it? I mean, it's also in Europe. Boy, Mario Draghi was practically in tears just yesterday when he was begging the Germans to start spending money, which they refused to do. So you have all this money sloshing around in the system. Where is it going to go? Well, we have seen that it's gone into stocks. That's one of the things supporting stocks. You can feel good or bad about that, but that's just an obvious fact. And another thing that is gaining from it is precious metals. And this combines with the other factors that are pushing precious metals higher. That is one, the supply-demand crunch. You know, I mean, we have hit peak gold, at least according to many in the field. And so that means that we'll have lower production this year than we had last year. And in fact, Goldcorp came out with an estimate that I was just looking at. They say by 2018, the production of the major gold miners will be 8% less than it was in 2015. How do you do that in an environment where demand is going up? Well, you fix that by raising prices. The other thing that can really affect the price of gold and other assets is the U.S. election. I don't think Wall Street has really priced in a Trump election, but I think that's coming.
How desperate do you think people might get when it comes to gold? Because I understand in a lot of places it's hard to get your hands on physical gold.
Well, I don't know what those places are. I mean, you have to pay higher premiums, that's for sure. So I haven't seen it that desperate, really. But anyway, whoever is reporting that, I haven't found a problem recently. Maybe there is one. I just haven't been shopping lately. And so we'll see how that goes. But, you know, these kinds of things are usually fixed by price, aren't they? Whenever there's a shortage of supply, then the price goes up, and then people get priced out of the market, and then there's enough to go around for those who can still afford it. It's a good system. It works, you know, and one that I'm kind of used to, so I wouldn't want to change anything else. Certainly wouldn't want to be Venezuela at this point. And so, you know, I mean, I think we'll see higher prices. Now, they just had the Denver Gold Show, and they did a survey of everyone there, and as most of your listeners know, that's a big show for all the mining CEOs and the analysts and the hedge funds and all that. And the average consensus said that at the end of the year, they expect the price of gold to be about 3% higher than it is now. That's not a lot. And I think that's kind of a low ball simply because these guys are still carrying the bruises of being beaten up by 4.5 years of a bear market. I think that if they can lift their heads out of the mud a little bit, they can see much higher prices by the end of the year and certainly into 2017. So if you can see that kind of big trend coming, you should start positioning yourself for that, I believe.
Is it better to own those gold shares or to own bullion?
Oh, this is a big fight we always have. Of course, I'm sure you can get some crank on here who will tell you that you should only own the physical because what else can you trust? In the age of paper, it's all going away and all this stuff. I like owning the shares because they're leveraged to the price of gold. And so as the price of gold, even if the price of gold only goes up 3% from where it is today, for some of these companies, that's a big improvement in their profit margin. So naturally, their stocks are going to respond rather well. And so, yeah, I would rather own the shares. I would rather own silver shares when you get down to it. Silver miner shares, I think they look good. They had a little correction. And let me talk about that a little bit. Now, going into the Fed meeting, we saw, of course, all these Fed governors come out and lie, basically saying we were going to have multiple rate hikes this year. And so that sent a correction through the gold mining shares, which was understandable enough because many of them are priced up way too much. So, of course, some of that air is going to come out of the market. The interesting thing that happened is in the gold ETFs of the world, the amount of gold held over that 5-week period where we saw the real correction there, that didn't change. The amount of gold held by those funds did not go down. So that tells me that some investors seem to be taking long-term positions. These are investors who own physical gold, which I just told you was not as good as owning shares, so you can listen to who you want to on that. But we're seeing investor demand for gold. really seems to be driving this market at this time. That can change, but that is a real bullish, positive force right now.
We'll have more with Sean Brodrick right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Sean Brodrick. Sean, when the Saudis put their camels to bed at night now, they're crying a bit, aren't they?
Oh, they must be really crying. And, it's hard to feel sorry for those guys. I think we all share that little bit of, schadenfreude, because the Saudis are sad because they can't get the prices they need. Now, of course, I also know people out in the oil patch over in Texas who are also feeling the same pain, and I do feel bad for those guys. Many of them, have to bring home the rent money. But the Saudis no one's feeling bad, and the news that we just got is they had to cut their bonuses and also certain subsidies that they give to certain organizations. And that shows you how much it's really hurting. They've also had to sell off treasuries. And one thing that must really be worrying the Saudis at this point, besides the fact they can't come to an agreement with Iran and Iraq and Libya and Nigeria on how much oil those countries are going to pump. The thing that must be scaring them is that when it comes to the big buyer right now, which is China, the Russians are eating the Saudis' lunch because right now the Saudis are losing market share to the Russians. They're also losing it to other countries like Angola, but the Russians must be really worrying to them. The Russians have been building pipelines, which, bring the oil and gas south to China, and it's much easier, it's much closer, and so that has to be a worrisome trend. That has to be a worrisome trend for the Saudis, because if they lose China, it's really a new situation for them. I don't know really how they'll handle that. I'm sure with much screaming, but they are a well-armed nation, so we'll see how that goes too. But that's really a problem for them. Now, there's actually a lot of stuff going on in the oil market right now. One that we have to realize is that storage on land is going down. That's part of the things that's been perking up the oil prices right now. But storage at sea is going up. This is great for the tanker companies, by the way. And I'm not sure why this is happening, because I haven't actually had time to look at this. I've been really involved in the lithium market and stuff like that. I'm about to head out to Nevada to do a tour of gold projects, lithium projects, that kind of thing. So I haven't had time to look into this, but apparently oil storage at sea is going up. That should be good for the tankers, but we have to ask ourselves why this is going on. One might be there might be, a real backlog moving things into China. There's all sorts of refineries there right now. They call them teapot refineries, these small refineries, and they're turning stuff around. Much of it is to feed the growing Chinese market because they sell thousands of new cars there every single day. And so that all means more fuel demand, right? But they're also exporting more. This, again, has to be worrisome for the big exporters of oil products. If they start to get more competition from Asia in this, and it looks like they're going to, that'll be a change in the market as well.
Didn't Saudi Arabia start this charge downwards because they wanted to put the American frackers out of business?
Yeah, and that worked to an extent. But you have to understand one other reason that the Saudis did this is because the last time they tried to do a oil restriction, the Venezuelans came out and took up all those orders that the Saudis weren't filling and took those contracts. And that really burned the Saudis. They have nursed that grudge for forever. And also, they're really worried about Iran. I can't overemphasize this enough, right? Iran is coming back into the market in a big, big way. And so that's putting more oil into an already glutted market. And so it's very hard for any of them to pull back because they're fighting for market share right now. How that fight ends, I don't know. I do expect oil prices will stay lower for longer. But there's also positive stuff happening in the market too. Here in the U.S., and I'm known as speaking to people in Canada, but just look over the border and over the wall you'll be building in the next few months. And just look down to where our natural gas prices are. They're over $3 now. That's a very nice move. And it looks like there's a bottoming in natural gas going on right now. And so I think you can look at that market, and I think there's some real opportunity there because a lot of companies that didn't make sense below $2.60 for natural gas, they make a heck of a lot of sense at $3. And sure, some of them have moved up, but others haven't. So you can look there for some opportunities.
Well, they are expecting a colder winter than last winter. I know in Vancouver last winter we had 1 day with snow. That's it.
Yeah, it's all these. I mean, we can speak about climate change, and I know talking about that topic usually gets people angry. But one thing is the big atmospheric events and the big ocean events that happen, like La Nina, El Nino, and stuff like that, that drives global weather. And so meteorologists, not being fools, can see these big changes coming. So when they talk about a colder winter, that's probably going to happen. And remember, that comes after a hotter summer, the hottest summer on record. And so that's the kind of thing that really uses up natural gas supply. And so, yeah, that's another bullish factor for natural gas.
You said you've been paying a lot of attention to lithium. What's the big hot thing there?
Well, it all depends on who you talk to. Right now, the hottest area of the world is down in South America. They have like a triangle there that's split between Argentina and Chile and Bolivia. And so, I mean, it's like a land rush going in there, and these small companies are being gobbled up by the bigger companies. The Chinese just came in, and they just said they're going to buy 2% of SQM. Of course, with the Chinese, it's often just slipping in a toe. You know, the whole leg's going to follow, right? So if you look at SQM, which I would try to pronounce, it's actually Sociedad Química y Mineral S.A. That's the big Chilean firm that does lithium as one of the many things it does. So I prefer SQM because, frankly, I've always been a marble mouth anyway. So they're very active. But while that's the triangle that excites everybody, there's also lithium in Australia, which is very exciting. There are new projects coming online there right now as we speak. And then there's Nevada in the U.S. And there's a wonderful canyon down there where there's already mining. But there are small companies staking things out, doing the exploring, doing the hard work. That doesn't mean that you should rush into those U.S. lithium stocks and just start throwing money around. Do your research. This is very difficult because some companies, you know, seeing what's going on in lithium, are changing their names and changing their focus and becoming lithium companies when all they really are is a real estate company with a spokesman. So be careful about what you buy. But if you can find teams that have done this kind of thing before and they have a track record of success and they're in the good zones, then that might be worth looking at because according to multiple estimates, the amount of lithium the world uses is going to double in the next 5 years. Think of any other commodity and what that would do to the price if demand doubled in 5 years. That's just simply tremendous. And so there's opportunity that just hasn't been met yet. And everybody thinks about that huge factory being built down in Nevada right now. But there's at least a dozen more around the world that are also being built, mostly in Asia. So there's a lot of opportunity there. I don't think we're at the end of the lithium rush. I think we're more toward the beginning. And so that's one of the things that I'll be checking out when I'm in Nevada.
Sean, thank you so much for chatting with us.
Thank you. I had a great time as usual.
My guest has been Sean Brodrick. His website, energyandresourcesdigest.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Godry. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.